4.6% in May. That's a huge number. Now,
well, in fact, Larry, everyone's talking about energy stocks, but from the March bottom, tech is up as much as the energy sector.
That's correct. And tech is a classic growth area.
You bet.
Tech's a classic economic recovery area. All right, Don. Computers this week up 4.5%, led by Dell, which had very good earnings. We're also seeing it in the Cisco-type communication stocks. We're also seeing it in the software stocks. We're also seeing it in the SOX index. We're also seeing it in the telephone companies. I don't know where that's coming from. What's your tech take? Because I think this is really a key part of the stock market's evolution towards Goldilocks.
Well, this is one of those cases. This is one of those times where you have to be very discriminating when you talk about the economy, because the economy includes things that are in outright depression, like housing, and it includes things that are in outright boom, like technology. So, for instance, high-tech industrial production is at all-time highs and going at roaring growth rates, even as overall industrial production is flattened out a little bit in this slowdown. So it is, just as people say it's not a stock market, it's a market of stocks, it's not an economy. It's a portfolio of microeconomies, and the smart investor looks at these sectors one at a time and figures out the winners and the losers and steps aside from some of this falsely macro analysis where you try to make one size fits all. We are in a diversified situation.
All right, so Pinto, you don't agree with Luskin?
No,
I mean, the facts
really
are the facts.
No,
Look, here we're going to put up, here's the chip index, the SOX semiconductor index. We got to probably, I don't know if we put the computer index up or not. And the whole market is up about 10% since the early March lows.
You can date
That's
them
a
on
heck
if you
of a
want
thing.
to and pick the low.
But we never had a bear market in the first place, Mr. Pinto.
Listen,
we never had a bear market. That's very important. Bears weep. Bears weep.
In 2004, we had a Fed funds rate at 1%. We raised rates to 5.25 in 2007, and the wheels fell off the economy. But now we see we have a consumer who's under more stress than they were now in 2007. We have continuing claims at 3.1 million, the highest since February of 2004. We have a record number of existing homes for sale, 11.2 month supply, and yet you want people to believe that the Federal Reserve can now raise rates from 2% back to 5%. I want somebody in this panel to explain to me how that is possible.
Yeah, I don't see the Fed.
I simply,
if you look at the FOMC minutes, I think the Fed is saying we're worried about growth, we're worried about credit markets. I think if anything, the Fed's going to keep its paws. I think this notion that the Fed will rise in October is actually probably very unlikely, especially given that by that time we'll probably see some of this stimulus coming out of the system. There's an air pocket waiting out there vis-a-vis the consumer.
You know, with all those houses on the market, this is a great time to raise rates because people are waiting for low rates. So if there's a sense that the Fed is going to start raising rates, then people are going to get off the dime and say, I better lock my mortgage in now.
Jerry Bowyer, you bull or bear on stocks right now?
Bull.
Because stocks represent the American economy and business situation. Bull or bear?
A mild bull.
A mild bull. Jared Bernstein, bull or bear on stocks?
I think neutral, maybe a little bear, given where the consumer's at.
All right, Pinto, bull or bear on stocks?
19 times trailing 12 times earnings, trailing 12 months earnings, the market is not pricing in the 3 Democrats that are going to be elected come November.
Which 3?
We have 3 Democrats running. You got Obama, and then you got McCain.
Really?
Yes,
McCain is a
cap
Democrat?
Cap and
That's
trade
very
McCain.
cruel.
Well, he's
extremely cruel.
He's not an Austrian economist.
That is true. He probably never heard of Austrian economics. Don Luskin, bull or bear on the stock market?
Bull.
Don Luskin, you really helped create this whole new paradigm with gold falling and real interest rates rising. I think it's playing out exactly right, Don.
It is. And you know what? The Fed is definitely going to be raising rates by October. I think by the end of the year, you're going to see rates at least at 3%.
So oil is destined to come down. If the dollar goes up and real interest rates go up, Don, oil's, I don't know, it's going to go to 100, maybe less than 100.
Yeah, you know what? It's so volatile right now. It could easily go to 100 just on noise. But don't forget, the world economy is coming out of recession expectations, and that means that people are going to be expecting more oil consumption in the future than maybe they were thinking about 6 months ago. So, you know, there's a demand phenomenon here. It's good.
All right, great stuff. No recession, no bear market. Bears weep, pessimists weep. Thanks to Michael Pinto and Don Luskin. Jerry Bowyer and Jared Bernstein have a lot more duking out.